to my channel. My name is Catherine Morgan, qualified financial planner and multi-award winning financial coach. And in these videos, I'm hoping to bring you some wonderful tips and tools that you can integrate into your work, either as a business owner or just to shift some of those mindset blocks. So make sure you hit the subscribe button and the notification bell. Now, in today's video, I'm going to be sharing with you some of the key questions about the differences between operating as a sole trader and a limited company. Now, I have both. I have a sole trader and a limited company. And so there are certain situations where it's best to be one over the other, but also sometimes you may be operating as a sole trader and thinking about going as a limited company, but perhaps want to understand some of the differences, or maybe you're new into business and you're wondering whether to go straight as a limited company or to start as a sole trader. So I'm going to cover some of the key differences in this video for you. Throughout the video as well, I do mention some references to something called Profit First, and this is an absolute game changer to your business. I have a separate video on that particular topic and also a podcast episode. So if you do want to find out more about those topics, then make sure you subscribe to these videos and go and check out the podcast In Her Financial Shoes. Now, with this particular video as well, we originally brought this content out to our Facebook community. So if you hear me interacting with people on the video, that's where I've been interacting with my Facebook group. And if you're not already a part of the community, do head on over there as well and come and join us. But please forgive the questions and answers throughout the video. But that's just the way I like to produce my content so that I can actually really help people to progress with their steps. So if you have any particular questions as you're listening to this video, please feel free to pop any questions in the chat below, and myself and my team can come back to those questions to help you progress forward, remembering it's all about the small steps and big wins.
So this morning I wanted to spend a little bit of time talking about some of the differences between operating as a sole trader versus a limited company. Now, the reason I wanted to talk about this is because I get lots of questions that come in about what to do when you're going self-employed, what are some of the tax differences. And although obviously I'm not an accountant, the work that I do is very much linked to managing business finance. And I work alongside some awesome accountants. And in fact, we have my own accountant, who I call the human accountant, because she's so brilliant. And she's by far one of the fewest accountants I have come across that actually speaks in my language, i.e. no jargon. There's a couple of great accountants that I work with that make sense. But the question around tax, particularly when you're running a business, can be quite daunting, particularly if this is your first business and this is maybe you're early on in your business. And I actually wrote a blog a couple of weeks ago called 13 Tips on How to Prepare Your Finances When You're Going Self-Employed. If you haven't had an opportunity to read that, I'll pop that in the links below, in the comment below. But today I wanted to talk about some of the main differences between operating as a sole trader versus operating as a limited company. So first of all, I would love to know, if you're listening to this, if you could let me know in the comments, where are you currently? So if you're in business, just let me know whether you're a sole trader or a limited company. If you're not in business, just let me know not in business. And maybe you have some personal tax questions that you'd like to ask under this video. So let me know where you are in your business. If you're a sole trader, whereabouts are you in your business journey? So are you in year one? Are you in year two? Is this something you've been thinking about, but you're just not really sure whether you should maybe go to a limited company? So let me know in the comments below as you're listening to this. We're really interested to hear where you're at so that I can tailor this content accordingly. When I first started my business, the Money Panel, excuse me, I've got a frog in my throat this morning. Thank you, Anne. So Anne's a sole trader. Awesome. And Anne, just reminds me, what do you do? And for anybody else listening to this video, this is an opportunity for you to shout about what you do as well. So let me know what you do. So when I first started the Money Panel, I set it up as a limited company. And there were a couple of reasons why I did this from day one, which I'll share with you through this video. And I also operate as a sole trader. So I have two businesses. I have some of my financial planning work, which goes under my sole trader business, and then I have my limited company. So I operate both. So I understand the rules, the tax differences, all of those things. I've also done lots and lots of obviously financial advisor qualifications, one of which is around tax and trusts, which was like the worst exam ever, because I don't find it particularly interesting. I'm not a numbers person, believe it or not. I love dealing with money and helping people with money, but I actually don't like the technical aspects of some things around, particularly around accountancy. So Anne's in her 3rd year, amazing, Anne. And laser hair removal, oh, awesome. And Victoria is a sole trader, awesome. And Victoria, what do you do? What's your business? And if you're watching this on the replay, just pop in the comments, sole trader or a limited company, and then tell me what you do. It's also an opportunity for you to try and kind of share some information about your business. Hi, Sherry. So Sherry, presumably if you're listening to this, you're in business. Are you a sole trader or are you a limited company? So I'm going to get stuck in some of the differences between them. This is not going to be a long video. I want it to be quite short and snappy. You may want to grab a notepad and a pen, but here are some of the main differences between sole trader and limited company. So the first difference between a sole trader and a limited company is that when you are set up as a limited company, you are a separate legal entity. Now that can have its benefits, largely in the fact that from a liability perspective, the liability is limited to the company, not you personally. So whilst you will be a director of that limited company, your liability is limited to the company. Now, this has its advantages in some ways. If your business ever got into any trouble, then the liability sits within the company, not you personally. You do have director responsibilities, but any debts, for example, are all limited to the company. Now, one of the benefits of being a limited liability is, of course, if anything, worst case scenario ever happens, somebody wouldn't be able to personally come after your assets, so your home, for example. So that's one of the big differences between a sole trader and limited companies. You have that limited liability. Now, I'm not in this video going to go into the technical aspects of things like limited liability partnerships or things like that, but just as a clear differentiator between sole trader and limited company, that's one of the main differences. The second main difference between being a sole trader and limited company, in my opinion, is that it can be much more professional to operate under a company structure rather than personally. Now, this will really depend on your business as to whether that has any advantage. But certainly when I'm working with somebody, there's just that little bit of extra, what's the word I'm looking for? Just kind of security, knowing that they're a company rather than a person. Having said that, I have also had some issues in the past with working with one particular lady who I did some due diligence on, but not enough due diligence. And she ended up taking a lot of my money and lots of other people's money. And then she wound the company down, and there's nothing that we could have done about it because the liability sat with the company. She closed that business down. There was no money there was no assets in the business, so I couldn't actually get that money back. And then she just set up another company, did the same thing again, closed that company. It was a nightmare. So actually, what the lesson that I learned from that was to do due diligence with anybody that you work with. Ask around, ask for testimonials before you work with people, just be mindful of that. So, but that is a big difference between them. But in my opinion, particularly again, depending on your business, but I think it can come across a little bit more professional under a limited company structure, but again, depending on your business. One of the other main differences is that you can offset more expenses under a limited company than you can on a sole trader basis. For example, I'll give you one example. One example is life cover. Now, for any of you that are in my Money Circle community, we had a big conversation about life cover yesterday, and I'm going to be going live on my page later this week to talk about how to actually address your life cover needs. It's a massive area I'm really, really passionate about. But one of the things that you can do when you're a limited company is that you can actually set up life insurance through the business. Now, the benefit of this is called a relevant life policy. So as the director, you essentially want to protect your life so that if you weren't around, your business could potentially continue. And that lump sum could be left to somebody to enable them to maybe employ somebody or hire somebody to take over your responsibilities. Now, as a relevant life cover policy, it's a business expense, which essentially means that the tax that you are liable to on a limited company is you have a personal tax return like you would normally have. And if you're a sole trader, that's all you would have is just a personal self-assessment. But as a limited company, you also have a company tax return. And the company will be liable to something called corporation tax. Now, one of the expenses that you can offset against your corporation tax bill is life cover or relevant life insurance. So, for example, I pay about £35 a month for my relevant life cover policy. It gives me about £500,000 worth of life cover. And it's a business expense. So yes, I'm still paying for it because it's coming out of my profits, but it's a business expense. So that's the difference between, one of the big differences in expenses between a limited company and a sole trader. This then leads me on to my next point, which is talking about pension contributions. Now, don't zone off from this video just because I said the word pension. And if you followed me on my page last week, I did quite a long video, about 35 minutes, on demystifying pensions. So if you haven't watched that yet, then go and find that particular video. But in terms of pension contributions as a limited company, then again, it can be made from the business. So a little bit like, if you worked for Tesco's would have a company pension scheme, they would pay into it and you would pay into it as the employee. Under a limited company, it can work exactly the same. The company can set up a pension, the employer, i.e. the business, can pay into that pension as an employer contribution, and again that can be offset as offset against your corporation tax. As a sole trader, you have to set up a personal pension, and you can personally pay into that, but you don't get any tax relief. You don't get any relief off of your income tax liability, because you're not paying corporation tax on a sole trader business. Good morning, Zoe. So Sherry's saying she's a sales coach and a trainer for SME and corporates, although now wondering if sole trader would have been easier. Yeah, it's interesting, isn't it, Sherry? I mean, sole trader is definitely easier in a sense of you have less legal responsibilities, less paperwork really, because you haven't got to set up the business. You just have to register with HMRC, and you only have one personal tax return. So it is a little bit more involved on a limited company, which actually comes on to one of my next points, which people don't always necessarily think about. You do have legal responsibilities in both setups, but particularly as a limited company, you have a director responsibility. And a lot of people miss this. For example, when you're paying yourself from the limited company, you should really be having like monthly meetings, documented monthly meetings, to explain, why you decided to take profits from the business. And in reality, not many people do this. And your accountant will be able to talk to you about what you need to do. But, you've got to run a monthly payroll. Well, you've got to run payroll, not necessarily monthly, but you've got to run a payroll. And I think sometimes we really misunderstand that there is a big legal responsibility as a limited company. So it is definitely something to consider. Sherry, out of interest, why do you say you were wondering if sole trader would have been easier? What challenges have you come up with? Good morning, Matthew. Morning, Rebecca. Morning, Becky. Matthew said, I think limited makes more sense across the board. Yeah, I would agree with that, Matthew. I think in most cases it does make sense. And I would say the general rule of thumb from an income perspective, and again, there's differentiating opinions on this, but and I was talking to my accountant about this recently actually, is once you start to get to around 50,000 is, you're coming into the high rate tax brackets. Once you start to be earning income in and around £50,000, I think it's generally more tax advantageous to go limited. And the reason that is in a sole trader, you have to pay tax on anything that you're earning. You have a personal tax allowance that you can offset, but anything over and above that, you are liable to tax and national insurance. On a limited company, you are able to draw £2,000 per tax year, tax-free as dividends, and the rest of it is then charged at 7.5% tax, up to the higher rate bracket. So in comparison to a sole trader at 20%, it can be much more tax advantageous to do that. Now, there are some different scenarios and things to calculate, but as a general rule, then that's a good kind of guideline to think about, right? Once you're starting to reach 50-odd thousand, then going limited could be more tax advantageous. Of course, there is the other consideration of going VAT, going VAT registered. And now you can go VAT registered whether you're a sole trader or a limited company. I recently went VAT registered last year, and I'm going to do a separate video on going VAT registered, because actually it was a real eye opener, but also quite scary. Like, people think, oh gosh, I'm going VAT registered, my clients are going to have to pay 20% extra, and how to manage that, I think, is really important. So I'm going to do a separate video on that. Sherry is saying, I do more work now with sole entrepreneurs, so not sure I need the limited business structure. I don't think actually that makes much difference, Sherry, in terms of whether you're working with solo entrepreneurs or not. I don't think that necessarily makes a difference. It's more about the legal structure and the tax scenario. What would be best for you? What would work in your favor, more so than your clients? Your clients won't really care whether you're limited or sole trader. I do think actually there's a professional element of being a limited company, but I wouldn't let that necessarily drive which way you go. I think certainly have a conversation with your accountant, assuming that you have one. And again, depending on your income threshold, will depend on whether you're actually better off to sit within a limited company structure. Good morning, Amy. Morning, Sarah. Matthew said, I didn't know life cover was a business expense. Yeah, so Matthew, if you're a limited company, then you can look at it's called a relevant life cover policy. Drop me a message if I can help you with this, because this is something that we can organise for you. But relevant life cover can be set up under the business, so it sits within the business, and that policy, and there's different things to think about with relevant life cover policies, but yes, it would be a business expense. It essentially comes off your corporation tax. Loads of people don't know it, Sherry and Matthew. It's I don't know why we don't talk about this. I guess it's because, and I actually have had several conversations with accountants that don't know this. So definitely something to look at. Morning, Deborah. Morning, Hetty. Hi, Linda. Sarah's saying, my husband set up a limited company, but we couldn't have done it without a decent accountant who knows the rules and the benefits. Yeah, sure. It's actually very simple to set up a limited company. You can register that with Companies House. And that's actually one of the other benefits of going limited, is once you register your company name, there is, no one else can take that company name once you've registered it. And I would strongly suggest you even consider at that point some trademarking as well. So yes, it is very easy to set up, but I would always suggest speaking to an accountant, because you need to be aware of the legal responsibilities and of course the rules and the benefits. Morning, Cindy. Morning, Jodie. So Victoria's saying, if you are a limited company, you have to pay an accountant to do full accounts for the business, ? How often? You don't have to pay an accountant, Victoria. You can do it for yourself. You would have to run payroll. You'd have to do your personal tax return and your company tax return. How often? Once a year, you would do your tax return as you would normally do for any tax return. So yes, I hope that answers your question there. Jem, I've been advised not to, as there's personal tax and then my corporation tax of 20%, so that's 40%. No, that's not quite strictly true, Gemma. So depending on your income, corporation tax is not 20%. Again, it depends on your threshold, and it depends on whether you're in the higher rate or the basic rates. So yeah, I mean, if you've had a chat with your accountant about it, then I'm assuming that they've given you advice based on your situation. But no, it's not the 20% and the 20% is 40%. It's not quite how that works in a limited company structure. In a limited company, you can draw tax-free salary of around about, I can't remember the exact figure off the top of my head, it's like £8,500 a year. That's tax-free. And then on top of that, you can take £2,000 tax-free dividends. And then anything you take between that and the higher rate threshold, you pay 7.5% tax. So it's not 20% and certainly not 40%. Yes, I will cover VAT separately, Cindy, no problem. Victoria, also when you're a limited company, you're paying corporation tax, but if you pay yourself, you still pay income tax personally, separately, ? So when you're a limited company, you pay personal tax and corporation tax. You may not actually pay any personal tax. It depends on how your accountant, what your income is and how your accountant, what expenses you have to offset. There is lots of expenses you can offset as a limited company, office, marketing costs, materials. If you run your business from your house, you can offset business expenses for a proportion of your energy costs, for example, although you have to be a little bit careful on some of the criteria around like things like home insurance. If you work from home, you should really check that your home insurance covers you for operating your business from home. And you want to also be careful that you don't fall trap of the capital gains tax limitations on running a business from your home. But I won't go into that specifically on this video. But yes, you can offset some of the costs of running your business from home. You know, stationary costs, courses and programs, if they're related to your business, then again, they can be offset against the business. If you're VAT registered, of course, you can be claiming back any VAT that you're paying on services that you're using. So you have personal tax liability, and then you would have a corporation tax liability, Victoria, and depending on your expenses will depend on what that looks like. But for me, it's more tax advantageous for me to be under a limited company structure than a sole trader structure. Hi Fran, hi Fiona, hi Carol. So Gemma, yeah, so if your turnover is 55, Gemma, you're really on that cusp, I would say. And I would definitely have a conversation, and I would also get a second opinion on this, because in my experience, when you're earning around 55,000, then that's going to be the tipping point for when it would be very likely to be more tax advantageous for you to be under a limited company structure. Victoria, when you do self-assessment, the return is very simple, but it's submitting full accounts for a limited company. Is it more comprehensive? I don't think anything's easy with HMRC, is it? I think it's a little, yes, it is more comprehensive. I think you're right. You are right. But don't let that put you off, because I would say if you're going to go limited, pay £1,000 a year or whatever it's going to cost you for a good accountant to submit your tax returns. If they can't demonstrate that by you paying them £1,000, which is an average cost for an accountant for a limited company return, if they can't demonstrate that they're going to save you £1,000, then I would go and find a new accountant. The likelihood is they can definitely save you £1,000 just by looking at your expenses, for example, just by looking at things like pension contributions and relevant life cover policies. You could quite easily save at least £1,000, and then they'll be doing their job. And a good accountant will want to be proactive around this. Can I just say this about accountants? And if anyone is listening who is an accountant, this is not anything against accountants. I just think that it's really super important to find a proactive accountant, not somebody who just does your bookkeeping. A bookkeeper can do that, and they love doing that, and they're great at what they do. But find an accountant who is proactive and ask them, there is always a bit of a grey line with tax, isn't there, right? There is a bit of a grey line. Some of you will be prepared to go up to the line. Some of you will be prepared to go over the line. I've never been someone who's prepared to go over the line. Just not comfortable for me at all. So ask your accountant, do you take me over that line? Because if they do and you're not comfortable with that, then go and find another accountant. I worked with an accountant a couple of years ago, not for me personally, but in an organisation, and I wasn't comfortable with ever going over the line. So I knew that they weren't the right accountant for me. So definitely something to think about. Gemma, I was under the impression from accountants that it's more costly. It is more costly, definitely, but you're talking about like probably £1,000 a year more costly. And get them to do some comparisons. Say to them, right, based on my projections, if I operate as a sole trader, give me an idea of what the tax liability would be, what my profits would be at the end of the year, and tell me if I have a limited company structure, what would be my do a similar comparison. Get them to be proactive with this for you. Morning, Becky. Sonia Marie, I have a sole trader business for 11 years and a limited company for 9 years. Both have pros and cons, absolutely. For my limited, I use software and have access to an accountant to do my payroll. It's pretty smooth, and once you understand all about expenses, how to pay yourself, yeah, absolutely. And for any of you that are familiar with the Profit First model, this is what I use for my business. And if you haven't read the book, go and read it. It's by Mike, I can never pronounce his surname, Misklinski or something. It's a great book, and I've actually got some training coming up in my Money Circle membership next month around Profit First. It literally will change your business. It will change your life. And I don't say things like that lightly. It's all very much focused around increasing your profits in your business. So yes, 100%. There are pros and cons of both. And have I covered all the pros and cons I wanted to talk about? Yeah, I think I have. Hiya, Christine. Victoria, I need to find someone proactive. Yeah, like this is why I call my accountant the human accountant. She's coming to the Money Circle next month. She's brilliant. But it is really important to find the right accountant, 100%. Christine, I do my own bookkeeping and only pay £288 for my accountant as a sole trader. Yeah. So a sole trader is very straightforward. May just cost you a couple of £100. Limited company will cost you more. But again, if you can save more than £1,000, save more than the cost of what it's going to cost you, then it's worth it, right? So I hope this has been useful. Oh, thank you. Yeah, how do you pronounce his surname? I still can't even pronounce it when I even see it. Anyway, go read the book Profit First. I've done a podcast on it as well. So if you prefer just to get the speedy version, go and find the In Her Financial Shoes podcast and look for how to implement Profit First in your business. It's also written out as a blog on the website, themoneypanel.co.uk. So you can go and read it if you prefer to read rather than listen. But if you're listening to this on the replay and you've got any questions about this, do pop them underneath and I will speak to you all again soon.
So I hope you enjoyed today's video. And if you did, if you could do me a favor and let me know in the comments below, what was your biggest takeaway from this video? What did you learn about the differences between sole trader and limited company? Let me know in the comments below. I'd absolutely love to hear from you. And remember, small steps, big wins. Let's go. Bye for now.